Property taxes are a large source of revenue for local governments, financing a broad variety of programs and services, from emergency services to public libraries. They're called ad valorem taxes, meaning they're based on the value of a property. Taxable property in a local government's jurisdiction is assigned value by an assessor's office. In most states, the appraised value is an estimate of the price anticipated for the house selling on the open market, the fair market value. The appraised value of a property is not the same as the assessed value. Let's say a property is assessed at $175,000 and the local property tax rate is 8.5%. To determine the property taxes, we multiply the assessed value of the property by the tax rate. The formula looks like this. Assessed value multiplied by the tax rate equals property taxes, which means the property owner will owe the local government $14,875 in property taxes annually. Millage is another way property tax rates can be calculated. Millage means that the tax rate is calculated per $1,000 of assessed value. In this case, the formula looks like this. Assessed value times the millage rate, then divided by 1,000. This equals the property taxes. Let's assume that the millage rate for a certain municipality is 20.24, and the property is assessed at $375,800. To figure out the taxes owed by the property owner, we start by multiplying the assessed value by the millage rate. This gives us $7,606,192, which is then divided by 1,000 to get the property tax amount. So the property owner should owe the local municipality $7,606.20 in taxes, rounded up, of course. Another important formula is calculating the adjusted tax basis for a property. The formula used for determining the adjusted tax basis looks like this. Purchase price plus improvement value plus total accumulated appreciation minus total accumulated depreciation equals the adjusted tax basis. Let's assume a plot of land is purchased for $75,000. The property owner then adds a structure to the property valued at $200,000. In addition, the value of the property appreciates by $4,000. Over time, the property depreciates in value by $9,000. The first step is adding the purchase price, improvement value, and total accumulated appreciation together. Then we subtract the total accumulated depreciation from $279,000. The adjusted tax basis for the property is now $270,000. The last type of calculation we'll discuss is the proration of property taxes. Property taxes are paid on a yearly basis. So whenever a property is sold, the cost of property taxes is divided between a buyer and seller based upon the portion of the year that each held the property. The buyer generally reimburses the seller at closing for the amount of taxes the seller paid for the days and months that they won't own the property. The formula for determining the amount of taxes owed by the buyer to the seller looks like this. Being able to explain property taxes to clients is an important part of a licensee's job. While you can't give tax advice to your clients, you can explain to them how they're calculated, which can give them an idea of what they may owe.